Welcome, everyone. I'm Valerie Leonard, founder and CEO of EverThrive Financial Group. And today I want to talk about 5 things that you need to know this month as an investor, including updates on inflation, interest rates, the job market, our outlook for the stock market, and more. What's in store for you today? So, I'm going to be breaking down the rhetoric and the rumors about interest rates and the Fed. We're going to look at reinflation and what it means to you. I'll cover the latest on markets, and we're going to wrap up by talking about how all of this affects you as a consumer and why it's different than how it affects you as an investor. So let's dive straight in. Now, as you know, the Federal Reserve cut interest rates at its September meeting by 0.25%. This chart just shows you the Fed funds rate from this time last year through the end of September. And right now, we're seeing the markets pricing in another potential rate cut at its meeting later this month, which is going to take place on October 28th and 29th. Now, the Fed has been hinting at another possible rate cut later in 2025. But beyond this year, there is some rhetoric that we're going to see some changes when Chairman Reserve Jerome Powell's term comes to an end in 2026. So, as an investor, of course, it's important to stay focused on what's really on the table versus all the speculation that's out there. Right now, I'm paying attention to how the Fed is going to attempt to balance keeping inflation in check while also accounting for more possible slowdowns in the labor market. And so that's the number one thing to know about the Federal Reserve and its aim right now. They're going to be watching that closely. And this is true of other topics as well, whether it's the government shutdown or, of course, the Supreme Court hearing the court case on Trump's tariff agenda. Not all of the speculation or rhetoric that you're hearing about is really relevant. And so I'm here to help you cut through all the information out there and get to the heart of what's important to know as an investor. Now, speaking of keeping inflation in check, you can see here how inflation has continued to heat up since the month of April. And I'm going to be watching this trend closely, and so is the Fed. So keep in mind that inflation does have its upside. As I've said before in previous videos, inflation may not necessarily feel good in your grocery bill, but it can be good for the markets as investors tend to pile into riskier asset classes in an attempt to avoid eroding their purchasing power because of the effects of inflation. Interestingly, the S&P 500 has closed at record highs many times this year. We saw that earlier this month. And the fact that markets have had so much momentum in the face of the government shutdown really speaks volumes. Later in the video, I'm going to talk more about what this all means for consumers. But first, another thing to note about inflation is the Consumer Price Index, which is currently sitting at 2.92% as of the month of August. And I believe CPI is going to move towards and probably over the 3% mark for the month of September and October, with projections indicating it's likely going to be sticky and hold around that 3% mark until next summer. Now, as a reminder, CPI really measures the average change over time and the prices that we as consumers pay for a basket of goods and services. So just for your reference, kind of in layman's terms, it really measures inflation as we consumers experience it in our day-to-day living expenses. This chart is going to show you the US CPI index in the red line, but then the blue line represents the Dow Jones Industrial Average from 1950 until today. And what you can see here is not a correlation between the stock market, if you will, and the effects of inflation. So this means that you can really feel a pinch when you're paying your bills. And then markets can still be strong at the same time, or of course, vice versa. So, this is one reason you want to avoid making investment decisions based off of how your monthly expenses feel. We always want to avoid making investment decisions based off of emotions altogether. But our regular monthly expenses are not really indicative of the broader stock market reality. So, as a side note, this blue line is also a reminder that playing the long game in the markets may set you up to grow your investments over time. And at least, from a historical perspective, we know that, of course, there's no guarantees about the future, but this does tell us a lot about how the stock market has performed in the past. On the labor front, we've seen multiple revisions to job market data in 2025, which has been atypical. It's been very frustrating. It's made it all harder for us to really understand what's happening in the jobs market, and it makes it difficult for markets and investors to react. When we don't have clear data. So we do know that unemployment has been rising. The employment to population rate has been holding static. And then we're also seeing an increase in the number of people flowing from unemployed to what we consider not in the labor force at all. One thing to note as an investor is the impact, or right now, the lack thereof, of AI on the jobs market. So, the Stanford University Digital Economy Lab recently did a survey and they found that AI is affecting unemployment for entry level workers in the most AI exposed industries only. But there's not been an extensive impact on mid level career employees, nor is it the cause behind widespread tech layoffs. We also saw an Upwork hiring report for the month of September, which noted that what they call an increase in AI course correction jobs. This just means that we've seen an increase in freelancers looking for work in areas like digital marketing, recruiting, project management, writing, and so on. So the data shows that companies were trying out AI, but realizing that the technology still needs human oversight and ultimately human involvement. So, a few things to consider as a consumer. We talked earlier about how inflation can be good for you as an investor because has an impact on the markets overall. But of course, no consumer enjoys paying higher prices because of inflation. Different generation gaps experience consumer effects differently. So we saw a 2024 Credit Karma survey that found that 38% of Gen Z home buyers needed help from their parents or other relatives to make a down payment on their new home. That's a stat that's not really encouraging. And with entry level jobs being more affected by AI than higher paying, jobs, younger workers obviously have a different career path ahead of them than their parents' generation. So that's something to consider. But on a positive note, we do not see signs of a recession ahead. And although I do expect a market correction in our future, I don't expect it to be a long term downturn. So, riding out any upcoming market volatility should be important for long term investors. That's it for this month. Thank you always for subscribing to our YouTube channel. We'll see you here again next month. And thank you so much for tuning in.